Hey everybody, Smart Silver Stacker here. Welcome to another Smart Silver Stacker live stream. Now, looking at the chart here, the one-day chart of the price of silver, and you can see it's having a pretty significant move today, up 81 cents, 3.44%. This is courtesy of SD Bullion here. Now we're going to get into why silver is moving this way, why it's getting this nice rally this morning in the AM, what is driving this price action, and also what it could mean for the price of silver moving forward. And I think it's an important thing to examine, especially when you look at the catalyst for what is driving this. You know, this could mean some very big things for silver moving forward. Now, first of all, I do just want to point out that if you're in the mood to get some silver, we've got a flash sale on RCM bars over at SD Bullion, 100-ounce Royal Canadian Mint silver bars. I kind of wish I had picked one of these up yesterday, given the price action that we're getting this morning. But let's take a look at what is driving this. So we have got weekly jobless claims rising to a 1.5-year high. Here's the article on Reuters. And this seems to be the news development which is driving this rally in the price of the precious metals. Gold and silver are both up today, although silver moving more. You know, that's pretty normal. Silver does tend to move faster to the upside than gold, also to the downside. It's the smaller, more volatile market. It's one of the reasons I like silver, because I think that having a nice stack of silver will give one some leverage to the bull market in precious metals, which I believe is on the way. But let's take a look at this. Let's take a look at some of these numbers. So weekly jobless claims increased 28,000 to 261,000. And there's a chart here in this article that I want to examine, because this gives us a good idea of what's going on here. And you can see these are the jobless claims. Initial jobless claims is the orange line, and then the planned layoffs here in the gray. And so you can see as we go back to the pandemic, you know, we had a lot of jobless claims back then, of course, kind of normalized, came back down, part of this so-called economic recovery. But now you can see it's beginning to climb back up. And that coincides with all these layoffs we've been seeing get announced. And, you know, it's interesting. I mean, we get kind of mixed signals. We had the non-farm payroll coming out higher than expected recently, convincing everybody, hey, look, the economy's still good. Well, those non-farm payroll numbers, you know, one of the things that I think is important to note there is a lot of those jobs that were added were in low-paying service sector type jobs. A lot of those, I think, are probably people getting second jobs. And I think that these jobless numbers that we're getting today paints a better picture of what is actually going on in the economy. But an economic slowdown, why would that cause a rally in silver? Well, the reason is this. We're still living in this kind of bizarro world. You know, we don't have real price discovery. Everything that happens in these markets has to do with the investors' anticipation of what the Federal Reserve is going to do next. And we can see when we look at the FedWatch tool here from the CME group, you can see, I think yesterday I covered this and it was down around 60 something. Well, this is the anticipation of a Fed pause in June, this number here, that they'll keep the federal funds rate at 500 to 525 basis points. That's where it is now. This number over here would indicate a increase, another rate hike in June. So this number's dropping, this number's rising. It means that on this jobless number report, now investors are anticipating there's a stronger likelihood that the Fed will pause, or skip, I think is the word that they're using, because, you know, they don't want to indicate that they're done by any means, you know, hiking rates. They're just skipping a month. But that's probably going to happen. And when you get weak economic data like this, it leads investors to believe that the Fed is more likely to ease up on the rate hikes, you know, and take a little bit of a less hawkish approach. And it's probably true. I mean, the weird thing here is that the only thing really driving price action in these markets is the Federal Reserve. Now, I'm going to go to the chat here real quick because I've got Albert D in the chat saying, I sure wish I started stacking sooner. Well, Albert, I got to tell you, it's really not too late to start stacking. Now, I'm not, you know, in the business of giving financial advice. I'm just telling you what I'm doing. But, I mean, I started stacking, I think, back around 2009, 2010. And the prices that we have right now in the silver market are close to where they are when I started stacking. So if you're just getting into stacking now, not a problem. The silver price has remained stubbornly low for a long time. Yeah, it's up 80 cents today. We've got this nice little pop in the price of silver this morning. I find the chart here, but I want to pull up the long-term chart just to give you an idea of why it's not too late to start stacking. So we had this nice pop today, but zoom it out. You can see that, in 2011, silver had almost $50, and today it's at $24.41. So definitely not too late to start stacking. And compared to where I think the price of silver will be in years to come, I really do think this represents a huge opportunity. But one real key takeaway, because I did mention I want to talk about what this means for the price of silver moving forward, is that if negative economic data becomes a positive catalyst for silver, and that seems to be the story here, then I think silver is going to do real well moving forward, because we've got a lot more negative economic data coming down the pipe. If you're paying attention to what's going on in the economy, that inflation is still out of control. The official numbers, I think, for April, 4.9% CPI. If you go grocery shopping or you pay for any services or you buy anything, that inflation is in reality a lot higher than 4.9% year over year, And when you look at all the layoffs that have been announced, it's no surprise that jobless claims are up, and those layoffs aren't going to stop anytime soon. The Fed is going to continue hiking rates, very likely. Maybe they'll skip in June, but if they want to continue with this inflation fight at all, they're going to have to get rates higher because inflation is persistent. Also, they just raised the debt ceiling. So we know that they're not going to rein in the spending. They're going to continue spending money that we don't have. They're going to continue borrowing more. And sure, in the short term, that might shore up the economy a little bit, but it almost guarantees that we're going to have a bigger government, a less efficient economy, more layoffs, higher inflation. All of these things are going to persist. And, one of the other things I think we need to be paying attention to is the price of crude oil. Now, it's interesting. Crude was in the green earlier today, but it's down in the red. $71.45. Now, we recently had this news that Saudi Arabia is going to be slashing their oil output. And when they made that announcement, I'll pull up the 1-month chart of silver. You can see it was on Sunday night. We had this kind of quick pop in the price of oil, but really that's all gone away now. And this hasn't gone into effect yet. When they announce these cuts, this takes a while to permeate through the world oil supply. So that initial pop was just kind of investors kind of trying to get ahead of it. But as the supply meaningfully shrinks, we are going to see higher oil prices. And that means that the economy is going to come under more pressure. So that means more negative economic data, more good days for silver, if you kind of get the picture I'm painting here. Because oil is one of those things, cheap oil means it's easy to grow the economy. Inflation comes down because the price of oil touches just about everything in the economy. But when the price of oil starts to go up, it's the reverse. Oil gets high enough, it's almost a guaranteed economic slowdown. And I do want to point out that, we shouldn't take this decline or this, sort of cap that we've seen on the price of oil since that announcement as an indication of a weak oil market. A lot of this has to do with the Strategic Petroleum Reserve. And if we, you can see this chart here. We've released a tremendous amount of oil over the past year. Since, August of 2021, we've released almost about 250 million barrels, actually closer to 300 million barrels of oil. And if we go down to the latest numbers, we're going to scroll all the way down through all this data here, courtesy of the EIA, that's the Energy Information Administration. You can see that right now, this is the most recent data. If we go back, we go, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 weeks of declining oil in the Strategic Petroleum Reserve. And you can see it was kind of frozen for a little bit there. For several weeks, we had not released any oil from the Strategic Petroleum Reserve. But now, for the past 10 weeks, we have been, to the tune of just under 20 million barrels oil over the past 10 weeks. And so, that has been helping to prevent the price of oil from rising, certainly. But this is not a sustainable thing. This is not something you can do to really prop up the economy or fight inflation in the long term. In fact, kind of a zero-sum game, because eventually you're going to have to fill the reserves back up. But, higher oil prices, I think, are in the cards. Now, the EIA, same folks, this is a headline from oilprice.com. They're forecasting that despite Saudi cuts, oil's not going to move up that much. But when you look at what they're actually saying, oil prices will not average more than $80 per barrel in the second half of 2023. Well, averaging $80 per barrel, I mean, right now we're at what, 71.45. So that means we could see oil rise significantly in the second half of 2023. In fact, if it waits until, say, the third quarter, it could go higher than 80, right? Because they're talking about an average. And this is probably a very conservative estimate. I mean, the EIA, they are a U.S. government organizations, kind of their job to promote the narrative that is desired by the powers that be, and that would be one of lower oil prices, lower inflation, because they want to keep inflation down. They want to get elected. They want everybody to be happy with the economy, but they still want to be playing their game, printing all this money, sending billions of dollars of weapons around the world, raising the debt, and the IEA, that's the International Energy Agency, they're actually forecasting higher oil prices and energy prices throughout 2023. So I think that that's likely what's going to happen. And that means very likely we're going to continue this economic slowdown. I mean, there's a lot of reasons why we're going to have an economic slowdown. One is that the powers that be, they haven't allowed the free market to clean up the economy for, decades, right? Every time we get the slightest hint of a recession, they come in and they print money, they do QE, they support the economy. And what would happen in a free market is, businesses that aren't profitable, they'd fail, they'd go out of business, their assets would be reallocated, debts that are unpayable would be written off of balance sheets, and, the economy, we'd have some pain initially, but then after the pain, we'd have economic recovery, a real one. But instead, what they've done is they've papered over all these problems so frequently and so much now that our economy is hopelessly addicted to easy money. What they're coming to realize is the consequence of that is that we get this, rising inflation. Their solution to that, well, raise interest rates. But the problem is there's tremendous amounts of debt in the economy, and raising interest rates doesn't really solve the inflation problem when you keep borrowing more money, when you keep printing more money. And so all it's going to do is it's going to create an economic disaster. And every time we get a headline like, jobless claims jumping, it means that, we're probably going to see a rally in the metals. So anyway, that's what's going on in the price of silver today. I'm going to go to the chat here before we wrap things up, see if there's any questions or anything you'd like me to cover. We've got Mark saying, less job offers perks like pensions anymore. Why bother busting your butt for a company that doesn't incentivize longevity? People certainly probably leaving jobs, but I think that more of these jobless claims have to do with layoffs, because that is something that we have been hearing quite a bit about. Smash that like button. That Rally Car Guy says smash that like button. Please do if you enjoyed this video. Don't forget to subscribe to the channel, folks. I wouldn't hesitate to do some stacking in the face of the rally that we're seeing today, by the way, because I think it's just a harbinger of things to come. We're still lower than we were a couple weeks ago. We had $26 silver not too recently, and or fairly recently rather. Now still under $25. So I do still think that it's a good time to be stacking. But hey, not as good as yesterday, right? And that's the risk you run by waiting on the sidelines with fiat not accumulating metal, is that eventually one of these days the price is going to just shoot up and there won't be any more opportunities to get it. But I'm not saying that's around the corner. Timing the economy very difficult, but when you see things like this, you see jobless claims rising, you're paying attention to what's going on in the economy. I think it's pretty obvious we're in the midst of a pretty serious recession, and very likely a worse recession is on the way. And that's not to mention all the other geopolitical threats we're facing. I kind of covered that in depth yesterday, but if we see this war breakout or increase in the Eastern Europe or in the South China Sea between China and the U.S. involving Taiwan, that is going to be a death blow for this economy. And the only solution is going to be for the Fed to just print tremendous amounts of money and try to stimulate everything. Let's see. Tony Minuti says, are you sure this bump is not a spoof and a drop tomorrow? Well, no, I don't think it's a spoof. I mean, I don't think that precious metals markets are manipulated to that extent. We know some manipulation occurs. We know JP Morgan, some of their traders have been convicted. But no, I don't think that when you see an obvious news development like this that would trigger a bump in silver, that it's some kind of manipulation. I think it's genuine market forces. Market forces do still play some kind of a role. Although, when I say that, it's the market that's just paying attention to the Federal Reserve. That's the only thing that really is driving price action, to the extent that we have genuine price action and not just manipulation. The manipulation thing, yes, it occurs. I don't think it's the primary driver of silver markets or gold for that matter either. But I do think that investors are just hanging on every word that comes out of the Federal Reserve's mouth and these central bankers' mouth, and that's what's really driving action in these markets. And so, declining economic activity, high jobless claims, it probably does mean that the Fed's going to have to ease. And that's what's coming. The Fed is going to ultimately be forced to fire up the printing presses, slash interest rates, buy U.S. Treasuries, QE to infinity. That's what's going to be needed to prevent an economic collapse. The free market solution would be to just say, hey, let things collapse. It needs to happen because we have this, all this bad debt in the economy. We have all these worthless assets that have just been inflated and inflated and inflated. What we really need is a serious recession to clean up the economy. But, that's not going to happen because the powers that be, the central bankers, they don't believe in free markets. They believe in their power to control things. So anyway, that's what's going on with the price of silver today. And that's why I think that we're going to see more rallies like this in the future. But leave me a comment down below to let me know what you think. Thank you so much for tuning in, everybody. Always appreciate everybody who tunes into these live streams. Stay safe and happy stacking, everybody. And I will catch you next time. Smart Silver Stacker out.